Ladies and gentlemen, my name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're here with Managing Director Dr. Michael Jones from Impact Minerals. So, Michael's been kind enough to dedicate some time as he's going to give us a brief presentation updating us on how Impact's tracking this year, and then we're going to open up to a Q&A once he's provided with the presentation. Michael, it's all yours.
Great. Thanks, Ryan, and thanks for everybody for logging on. Just bear with me while I share this screen. Should be in presentation mode. There we go. There we go. Thanks, ladies and gentlemen. There's a crystal of high purity alumina for you. And we are in the process of disrupting this niche mineral business, but a very important mineral in the energy transition which is going on, because we believe that we have a very low-cost producer of this quality material. So before I start, look, I just wanted to talk about the early part of my career, because I came to Australia in 1988 and I worked for a company called Western Mining Corporation, which was well known back in the day, got taken out by BHP. And I was in a project generation team, and my job was basically to research world-class deposits and try and find analogies of those in Western Australia for gold and nickel. And during that process, very formative years there, first 6 to 8 years of my career, we became familiar with what really made a world-class deposit. And so we set up Impact to find a world-class deposit, and they are very rare. They're tier one deposits. You'll hear people talk about them. It is perhaps a bit of a trite term, but I can tell you from my 20 years experience now, almost running Impact, that to find anything less and try and get it into production is really not worth getting out of bed for. And your market caps very rarely get above 150, maybe 250 million. Whereas if you make a world-class discovery, you can get to $1 billion market cap without really turning a sod of earth. And a good example of that is something like De Grey Mining, 20 million ounces they found, 10 million ounces they found up in the Pilbara, and a $1 billion market cap. And then recently Azure Minerals with their lithium discovery just got taken out for over $1 billion. And they haven't even started mining yet. So that's really what Impact was set up to do. We've had a few near misses in our time, but this lake that you're looking at now, Lake Hope, which is about 500 kilometers from Perth, believe it or not, in the top 2 meters of that lake is something in the order of $20 billion worth of high purity alumina. And you can imagine that, it's in terms of mining this thing, it will be a relatively straightforward process. And so Impact has the right to earn 80% of this project by completing a pre-feasibility study, which will be done by the end of this year. And at that point, we will own 80% of the company and 80% of the IP, and you can look up the details of that. But when I first came across this project, there was a bit of a, duh moment in terms of being able to get into it. And that's because HPA is an industrial mineral. And in the early part of my career that I mentioned, if you were going to get into industrial minerals, you shouldn't really do it unless one of four things had to be true. And the first one is that you had to have a very large deposit. And if we look at something like FMG, back in my day, you needed high-grade iron ore, but they found a large amount of low-grade iron ore and turned it into a world-class deposit. The second one is that you have to have the highest grade, and I've just mentioned FMG. They also had low grade, but managed to turn it into a world-class because of their low operating costs. Thirdly, have established relationships with clients. And a good example of that is Pilbara Minerals. They're in the lithium space. Lithium is an industrial mineral. It's a bulk commodity. There's no shortage of it. They've got established client relationships and have been able to survive the ups and downs of the lithium market as a result. But fourthly is that you have to be one of, if not the lowest cost producers to stay in the business through the mining cycle. And when I saw this lake, this is what I thought, this is going to be one of the lowest cost producers of high purity alumina in the world. And that was actually demonstrated by a scoping study that we put out in November. These are the economics, and I won't dwell on these, but in the top left-hand corner, we've got 10,000 tons per annum, which is a benchmark that we use in the industry of producing 4N HPA. And 4N stands for 4 nines purity, which is 99.99% purity. And it looks like the NPV is over $1 billion. Now, I've discovered that not a lot of people know what NPV is. It's called net present value. And that's actually the value of the material in the ground as it currently stands. So if someone was to come up to me and say, well, you know, I want to buy your deposit off you, what's it worth? I'd say, well, here's the economics. It looks like it's worth over $1 billion. And very modest capital expenditure to get that $1 billion expense. But the other key figure is down in the bottom left-hand corner. And that is that we believe that we can produce high purity alumina for less than $4,000 a ton as it currently stands. And that's hugely significant because it's significantly lower than anyone else. And so moving forward then, what's the value proposition and impact if we've got a project that's worth over $1 billion in the ground? So look, our share price at the moment is about 1.7 cents. We put out that scoping study back in November, and we were trading sort of basically around 1 cent for the next month or so. Got caught in a bit of the downdraft towards the end of the year, but we've been on quite a strong run since then, as the story about what we might have our hands on is getting out there to a wider audience. Hit a peak back in early May, just over 2 cents. Did a placement recently at 2 cents exactly. We've come back a bit since that time, but we've got a lot of news flow to come forward. So good chance to get in. But basically, we're still up 60 or 70% since November last year. And if you take a look across the resources space, there's very few of us that have actually done that. Market cap's about 50 million. So my job is to drive the price of that project, the market cap of the company towards the net present value. And that's about 25 times from where we are at the moment. So there's a significant upside in this in the share price. You must be aware, though, this is a scoping study. I'm confident that those numbers will be repeated or even better during the pre-feasibility study, which is in process. But we believe we can drive it that high over the next 2 to 5 years. So now is a very good time to be putting IPT on your watch list. And the value proposition driver is actually this low cost of production, which, as I said, is one of the 4 key pillars of getting into the industrial minerals and bulk commodity space. So what this is what we call it's a cost analysis curve. And we sort of projected ourselves into the future and pretending that ourselves and 1 or 2 of our competitors are also in the marketplace. But we can see that on the right-hand side here, that the Chinese and the Japanese are the predominant producers of HPA currently. Now, they make their HPA out of mostly out of aluminium metal. That's called the alkoxide process. But that metal has been mined as bauxite and then processed through a environmentally unfriendly process called the Bayer process, which is actually responsible for a lot of toxic waste and energy intensive. So their input costs are fairly high, and we estimate that their operating cost is sort of $15,000 to $20,000 a ton. So Alpha HPA, code A4N, is the standout in this business. They've currently got grants to help build a significant plant to get to 10,000 tons per annum. And their production cost is estimated to be at about $7,000 net of byproduct. And we believe that we can compete with them significantly by offering HPA at $4,000 or give or take as we move forward with the project. So that's going to be the thing that's going to allow us to get into this marketplace. So what is high purity alumina? There are 2 main uses that you need to be aware of over the next decade as the growth markets for both of them. So first of all, if you remember a few years ago, the Samsung phones, and there's a picture of one, were exploding in people's hands and people's pockets. And that's because HPA is used as a separator between the anode and the cathode, and sometimes as coatings on those to prevent heat buildup. So aluminium oxide, Al2O3, is basically one of the hardest substances known to man, and it's also thermally and chemically inert. And so it stops what they call thermal runaway. So if the battery's not made properly, the HPA peels away from the edge of the battery, you get thermal runaway and they explode, hence the phones and also the Tesla batteries that you see with their cars catching on fire. The second main use, and probably the largest use, is LEDs. So simple light globes, very banal, but in fact a growing market. And there's now legislation in place in the USA, for example, to ban new incandescent light globes. And so everything going in from now on is an LED. And same material is in your ULEDs, your OLEDs, your TV screens, your smart screens that you buy from Harvey Norman. Obviously, big growth market in through there. And there's a niche market appearing for sapphire glass, which is on your tablets and your watches, but increasingly sapphire for semiconductors. And that's certainly businesses that we're looking into. So people talk about it being the lithium decade going forward. Perhaps it's also the HPA decade. So demand is growing at about 20% per annum at the moment. And this is a demand curve shown in blue. So in dark blue, we've got lithium-ion battery, LED demand and lithium-ion battery demand up till about 2030, so increasing at about 20% per annum. And we've got the potential supply shown here in the bar chart. So around about 2026, we believe there's possible supply deficit or tightening of supply. And that's certainly the case as we try and offshore from China, who are one of the biggest suppliers to the Western world. And we're looking to sort of get into small scale production at around about that time. So why would you bother getting into the HPA space? Well, this is the reason. If we can produce it at $4,000 a tonne or thereabouts, it's currently selling at the benchmark 4N 99.99% pure, somewhere between $15,000 and $25,000 per tonne. So potentially huge margins in through there. There's a significant bulk and a significant market in the 3N space as well that we're investigating. There's also significant margins to be made in the really high purity material, what we call 5N and 6N, $25,000 or more per tonne. However, the volumes here are not that significant. And so certainly if we're going to be a lower cost producer, we're certainly looking to get into this 4N and perhaps in the 3N space in the first instance. And that will be our entry into the marketplace. So how much alumina do we potentially have? So we put out a resource last year, and we basically got almost 1 million tonnes, nearly 900,000 tonnes of alumina, all of which can be converted into HPA, give or take a couple 100,000 tonnes. So basically, we've got at least a 50-year mine life. And if you remember, the first rule was in bulk commodities, industrial minerals, was to have a very large resource, and we've certainly got that in spades in the top 2 meters of the lake. So where is this magical lake? It's about 500 kilometers east of Perth, basically in the middle of nowhere. It's close to a nickel mining centre called Forrestania, just at the crossroads here near Hyden. And Western Australia, one of the best places to work. You couldn't want to work in a better place to bring a mine into operation. And this is a picture of the exploration license that we have in blue. And the resource that we have is in these two lakes. Two small lakes in what we call the larger Lake Hope system. And the minerals of concern that we're going to be mining are in these two lakes. They do occur to a lesser extent in the other lakes in the area, but these seem to be the purest and also the closest to the road that we will haul the material out of near Hyden. So fantastic area. One of the great advantages already, it's a man-made one. There's actually a fire break, this line running from top left to bottom right through that figure there. There's a fire break. So basically we can drive up to the edge of the lake, and that will form the basis of the haul road, which has already been sort of partly put in for us. So fantastic man-made advantage there. And this is what it looks like on the lake. So this gentleman here is Roland Gotthard. He actually discovered the deposit. He realized that a lot of people in the HPA space were having trouble getting alumina out of some of the minerals that were being quoted, kaolin in particular. And he thought about what other minerals and what other processes could we get HPA out of. Came up with a process, thought about some minerals, and then went out and found the deposit. So a great piece of back to front lateral thinking for mineral exploration. And this is basically how we drilled out $20 billion US worth of material. And that was with a rubber mallet and a plastic push tube. You basically just hammer it into the clay, and it comes out looking like this. It looks like plasticine. And that entire drill program, including the assays, was a total of 60,000 Australian dollars. And so that is actually going to be the best return on a drill program you're ever going to see in this industry, I would bet. Interestingly, this is what we call an evaporite. It's probably still forming this deposit, amazingly enough. And the vast majority of the particles are less than 1 micron in size. We're sort of down at the sort of the human hair width in terms of the size of the minerals there. And that makes something very interesting, because it basically means that we have an infinite surface area. It's huge, very small particles. And so when we drop this material into the vat for processing, it basically goes into solution very, very quickly and very, very easily. So we have the basis here that we understand that the mining is going to be cheap, and perhaps the processing will be straightforward. So this is the East Lake, just an example of some of the high-grade material. We've got in pink here 27% alumina. That will be the starting material that we mine. And we're basically going to drive it off the side of the lake for the first 8 months when we should get into operation. And we're going to stockpile material on the side of the lake for 3 years, and then we're going to truck it off-site. So there will be no on-site beneficiation And so compared to a conventional mining project, which our hard rock peers are doing, there's no drilling, there's no blasting, don't need to crush it, and we won't need power on site. We can do it all by renewables. We won't need water on site, and we're only going to leave behind a hole in the ground that's about 1 meter to 2 meters deep. And we've done some test pits, and basically the material is filling in and swelling, and the hole is almost disappearing. So the long-term environmental footprint and liability associated with this project is also extremely low. Baseline environmental surveys have been done. No significant issues on the lake. There's a few modestly rare plants in and around the lake, but that's easily manageable because all that will do was really control where we put the on-site infrastructure, which will be transportable dongers and things like that. So again, be hardly any sign of us having been there at the end of the mine life. Very importantly, we've established a very strong relationship with the Naju people. They are the native titles group in the area. They're based out of Norseman, have a long history of mining in their area. We will be heading to Norseman next week, socialising the project with some of the key families there. And after that, we'll be lodging a mining lease application. As I mentioned, as it says, the heritage survey has already been done, so there are no impediments basically to mining on the lake. So subject to us coming up with a mining agreement, which will include payments to the Naju, looking at jobs and how we can help them in the community. We anticipate a very good relationship with them and no significant issues moving forward. And now I won't dwell on this, but basically, as I mentioned, the fine-grained minerals give this very unexpected reaction kinetics. We can just drop the material into the reagent, stir it, and it goes into solution very, very quickly. We have announced that we've got 2 process routes. The scoping study that I mentioned was based on a sulfuric acid roast, which we've talked about. But we also recently came out with a lower temperature leach, which is done at 90 degrees and currently looks to be perhaps our preferred process going forward into the pre-feasibility study. We're getting great recoveries. We produce fertilizer byproducts, which are in great demand by both processes, and we'll be talking more about that as we go forward. And at the moment, there's a lot of test work going on to optimize these processes, and that will be a key outcome of the pre-feasibility study. Some news out today. You can imagine, of course, that with simple mining and straightforward processing, that our carbon emissions are going to be low. And this is a graph that came out today. And on the left-hand side, we see the carbon emissions per tonne. That's tonnes of CO2 produced for every tonne of HPA we produce. And so by the alkoxide process, which the current Chinese and Japanese incumbents are doing, quite a lot of carbon emissions. Alpha HPA, as I mentioned, stand out in this area. They're using 100% renewables in their process, looking at about 5 tonnes of carbon dioxide per tonne of HPA. Our sulfate and low temperature process are certainly comparable with that now, but we intend to move in a net zero strategy that by the time we sort of get towards production, we hope to have lowered our carbon emissions as close to zero as we can get, subject to the West Australian government switching 100% to renewable power. And that's on par with a small producer in Canada, which produces its HPA by hydroelectric power. So we're on a world-leading par with all new sort of methods of getting HPA, and that's a pretty exciting thing for us going forward. So pre-feasibility study, it's full on at the moment. I feel like a duck at the moment. We're smooth sailing on the top, but we're paddling like crazy underneath. There are 4 pillars of that. The test work that I've mentioned, we're trying to optimize the process. We've got mining approvals underway. So we will be lodging the mine lease application. There'll be further heritage surveys, environmental surveys that need to be done. But again, not anticipating any issues there. Process plant location, we've spoken about this a few times. Very much looks like now we're going to be trucking the ore to Kwinana. We've established some very good relationships with people who can provide us the reagents we need and also can take away our byproducts and our waste products. So that's a very exciting development. We'll be announcing something in detail on that going forward. And then really one of the critical things that you need to be aware of is that we do need to establish relationships with clients who want to take our material, use it in offtake agreements. Going forward, we imagine that at the back end of this year that will be the key focus for us, and we have started the search for a marketing manager there. So all systems go. I mentioned Alpha HPA, standout success. And 4 years ago, 5 years ago, they were a small exploration company like us, came up with a new method of making HPA, and very recently hit a market cap of $1 billion. They've just achieved significant funding from the government because it is a critical mineral. Should have perhaps mentioned that at the start. HPA is listed on the critical minerals list for Australia, the US, and in Europe. And that opens up all sorts of avenues potentially of cheap funding and grants, etc., as we move forward. So exciting times. So just to finish with, quick bit of news about Impact. We listed in 2006, recently did a capital raised $3 million, and we've got R&D money and a few other bits and pieces that are coming through the door, sitting at about $3.5 million worth of cash right now. Market cap between 50 and 60 million, depending on the day. But we have been very strongly supported by two German shareholders, a family office in Dusseldorf, and ABC or Deutsche Balaton, which is a well-known resource fund that invests in numerous companies across the Australian and Canada space. We've certainly got the right people on the bus. Roland Goddard, who found the project and brought it to us, he's the technical manager. And we have David English, who was our pre-feasibility study manager, and he helped run the feasibility and development on both Sandfire's DeGrussa mine and Sirius/IGO's Nova Bollinger mine, both of which got into production in record amounts of time. And that's certainly David's adding to that, added immensely to the team. And we look to get into production also, hopefully in a record amount of time. So look, since we acquired the project in March last year, we've increased significantly, a good year-on-year returns, and we believe that as we tick off our goals over the next year or two, that we're going to push that market cap higher and higher. So what is our forward plan? Last year had a great year, but this year focused on the PFS by the end of the year. That's the key objective for us, getting material into qualification, and we are looking at trying to get a pilot plant going, which will then provide us with significant material to hand out to clients. Rolling into 2025, towards the end of 2025 and 2026, looking to basically complete the DFS, maybe get the mining lease granted, and at least get into some sort of small-scale production using a demonstration plant in 2026. And I think as we tick off those goals, so far so good, it'll be a great journey to be on. So look, please come with us on the journey. We aim to be one of the lowest cost producers of HPA globally. We have a unique deposit here in Western Australia. We've got this cost-disruptive metallurgical process. We're full on PFS, trying to prove up the economics, and I'm reasonably confident it's going to be a very good outcome. And we're rapidly building out our capabilities, both in the metallurgy, but also in providing the end user with the product that they need, not just the chemical specification, but also the physical specifications. And that will be a big focus for us towards the end of this year. And hopefully, over the next few years, we're going to have timing right, and we're going to be able to deliver into this high-margin business during the HPA decade, and we've got significant upside potential there. So there we go. Thanks for listening to the story. That was nice and fast, and so hopefully there's still time for questions.
Yes, thank you very much, Michael. I will just open up to a bit of a Q&A now. I've got a couple to start us off, but if any other participants have questions, please submit it for the Q&A, and I will ask them to Michael. So Michael, just to start off with, apart from the HPA investment that is ongoing, are there any other revenue streams coming on board? And other than what has been mentioned today, is there anything else that needs to happen for HPA to reach its full potential?
So the other revenue streams, we have announced here that we will produce fertilizers as byproducts. We have been looking at some of the lakes that have lesser quality alumina that, again, has potential for fertilizer products, and we'll have a bit of news on that coming forward. So that's a possible second stream. And then in terms of getting into the HPA market, it is all about establishing those relationships with the clients. What I can say is that from Alpha HPA's experience is that if you build it, they will come. And so certainly by the time we get our pilot plant under operation, I think we're going to find that significant demand will appear.
Okay, thank you for that clarification. Now moving on to the second question, is the PFS on schedule for release by the end of 2024?
It is indeed.
Brilliant start. Okay. If it is possible, when do you estimate HPA will be a cash-free flow operation?
Oh, so like any startup, it depends on how we end up getting to the end product. But assuming we get into small scale production, in our financial modeling for the scoping study, which is, plus or minus whatever it is, 30%, we basically had a 2-year ramp up and a payback, basically 2 years. So whenever we get into production, assuming it's the full scale production, it's a 2-year or less payback, depending on the size of the contracts.
Okay. All right. Well, thank you for that one. And then obviously you guys have just completed a capital raise recently on the open market. Is there any indication to the market currently if there will be need for a further raise prior to the end of the calendar year?
No, I think we've announced that we're good to complete the pre-feasibility study now. Very well funded. We're very grateful to our shareholders who also exercised options that expired in June at 2 cents. We got another 700,000 from that. So basically we're more than well funded to get to the end of the PFS at the end of the year.
Okay. All right, well, thank you for that one. And obviously, you mentioned earlier that your value proposition is heavily based on the net present value calculation. Now, obviously, that calculation is very independent on certain assumptions, inclusive of growth rates, risk-free rates, and the time period. Now, with the only visible data undermining that NPV calculation was the time period of 8. Now, with the other underlying assumptions, what are those growth rates? What are the risk-free rates associated with actually achieving that $1.3 billion valuation?
Sure, that's a great question. Obviously, a very educated group of watchers, which is great. I can't remember the exact numbers, but if you go back to the scoping study, you'll see that we put in NPV 10 and NPV 12.
Yep.
As well. And even at 12, I think we had an NPV of about 700 US million dollars, which is still extremely significant. And so, we believe that scoping study was very detailed. It was also super conservative, which is why, we're sort of still quoting that NPV underneath the scoping study. And, so far so good in the PFS. We're not seeing anything that's outside the parameters of that scoping study yet.
Okay. All right. Thank you for that one. And just regarding, your NPV values of 8, 10, and 12. Now, typically with net present value calculations, they, the 8 with the 10 and the 12 are associated with timeframes. So it's either a quarter, 6 months, or a year. Now, I would imagine that the 8, 10, and 12 are 6 months. Is that assumption correct, or are we more referring to quarters or years?
6 monthly. I mean, I think just trying to. I think when we did the calculation, we were looking at like a 27, like a 2027 startup, and then a 2-year ramp up from there. So that's the time frame over which that NPV applies. Obviously, back calculated it to today's net present value.
Of course. Well, thank you for that one. Just a couple of other attendee calculations to finish, questions to finish us off. We have an anonymous attendee asking, what can you do to condense the likely timetable, assuming the PFS is finished by the end of 2024?
So one of the interesting things about being in the battery and LED space is that we are in the technology market, and the technology market is changing at a hell of a rate. So we are going flat out to speed up the journey as best we can. So 2 key routes to that. We're looking at the pilot plant. We're looking if we can retool something that's available elsewhere, overseas, that would speed that process up significantly. And the big one is looking to see if we can modularize the plant. So when in HPA, and industrial minerals, there's always a trade-off between the size of the offtake agreement that you require to get your capital expenditure. That's brought a few people unstuck in the past, and I'm very laser focused on not making the same mistake. And so one of the ways to getting around that is to look at see if we can modularize the plant, in which case we're looking at modest capexes to build, say, multiple plants at 2,000 tons per annum rather than one big 10,000 tons. If we can do that, that will also speed up the the entire process.
Oh, well, thank you for that clarification. And just to finish us off, we have a participant that's asked that, on the basis that you've presented it today, it appears that Impact is undecided on the processing path in which they'll take to process the HPA. Is there a path that you are leaning toward, and when do you reckon a final decision regarding processing path could potentially be made?
Yeah, and that decision is coming very, very quickly. The low temperature leach process does look like it's now got a whole lot of advantages. when we started that test work in November last year, just at bench scale in the laboratory, shaving the lamb for Christmas, other experiments in there, you know, it wasn't continuous, but by February we'd reached HPA. So that was like 3 months. Now, you can go to anybody else. No, don't think anybody else got to HPA anywhere near that quickly. With the exception of Alpha HPA, we've catapulted ahead of virtually all of the only other 2 or 3 peers in the marketplace in terms of where we sit. So speed is of the essence.
Okay, all right. Well, thank you very much. Thank you very much, ladies and gentlemen, for viewing the presentation. Thank you very much, Michael, for your time. We really appreciate it, ladies and gentlemen. Thank you very much.